Assalamu alaikum and hello everyone. Welcome to my channel. Today we are going to proceed with consolidation issue on intragroup dividends, and as I mentioned in my previous lecture, there are three situations that will have to be considered should there are any intragroup dividends. And those situation is where you have to look at in a more specific way so that the correct consolidation adjustments are being made. And the consolidation adjustment will depend on how the intragroup dividends and interest have been dealt with by both the parent or holding company and the subsidiary company. For this session, I'm going to focus on situation 1, where situation 1 is the case where both subsidiary and parent company have recorded the interest or dividends. It means that the subsidiary has already debited or has already provided for its dividend and interest, and at the same time the parent itself has already taken credit of the share of dividends or the interest receivable from the subsidiary. So how do you know it is going to be which situation? Because as you know, there are three situations. The first situation is this, and second situation is where both subsidiary and parent have not recorded the interest and dividends. And the third situation is where the subsidiary has recorded, but the parent has not recorded the interest or dividend. So if you were to know which situation, you need to go and check the information given and also check the additional information. So I put the question here. If you see here, how to know it is situation 1. To know that that is going to be the first situation, the first thing that you need to do is check if there is any current asset available in the parent's book, meaning that the statement of financial position of the parent, right? And check for any current asset which relates to dividend and debenture interest receivable from subsidiary. Debenture interest receivable from subsidiary. So here, if you can see, the current asset section here, you have three items: debenture interest receivable from silent. For your information, silent is the subsidiary company. Silent is the subsidiary company, so I label that. And Havoc is the holding company. So there are information that only inform regarding the dividend and interest receivable from the subsidiary company, and these are the amount given. So you know that the parent has recorded the share of dividends and interest receivable. Another second situation that you can check is by checking the current liability section of the subsidiary. If you go to the current liability section, I put this three figures there. It is actually the dividend and interest that have been provided for by the subsidiary. So these are the amount given, and that does not mean that this is only due to parent. So the one that you have here may have a mixture of the one payable to the parent as well as the one payable to the non-controlling interest. What you need to eliminate is the intra-group dividend, which is between the parent and the subsidiary. What shall remain later in the group or consolidated accounts, consolidated statement of financial position, would be the one relating to the non-controlling interest, which refers to the dividend payable coming from preference and ordinary dividend. For the debenture interest payable, we are going to eliminate the intra-group debenture interest, the one that are paid to the parent, and the remaining that are related to other debenture holder will be disclosed in the group statement of financial position. So the second point that I highlight here is that there will be a current liability, and this current liability does not mean that this is exclusively related to the parent, but these are the current liability of the subsidiary, and what you need to do is to check how much of this relates to the parent. And you can see that these are the one related to the parent, so you can just subtract or deduct the one which is the total with the one that relates to the parent, and that will give you the one related to the other debenture holder, for example. Okay, right. The next one, what you need to do now. So if you know this is the first situation where parent and subsidiary have recorded the interest, by checking the current asset, there is some information regarding the share of dividends and interest from the subsidiary. You need to do the consolidation adjustment. What you need to do is to go and eliminate the intra-group transaction, because these are the requirement of the question. So let's read the question. You have the additional information. Havocs was a holding company, and the information of the holding company of the 10% debenture and share capital in Silent were as follows. So these are the percentage acquired by the parent or holding company: 70% for the ordinary shares, 40% for the preference shares, and these preference shares relate to the preference shares that were having the dividends here. 10% debenture, 30%. So the non-controlling interest for the shares is 30% and 60% respectively, and there are no non-controlling interests relating to debentures. That is also the same case is if you come across redeemable preference shares, because these redeemable preference shares and debentures, they are no such thing as non-controlling interest, because they are the non-current liability. So read the second situation that tells you this is situation 1, which both subsidiary and parent has recorded. So if you read the first line there, in part B, Silent has recorded, meaning that Silent has provided for the year debenture interest and dividends payable. So the debenture interest has already been provided under the finance cost and has been charged as part of current liabilities because it has been provided but not yet paid. And the same thing for dividend, where dividend has been charged as a current liability under the subsidiary, right? And dividends here are dividend relating to the equity share, so this will be an appropriation out of the profit or out of the current year retained profit. So that is not an item in the statement of profit or loss, but dividends payable relating to preference and ordinary dividends are the one which are distributed from the profits of the company. Havoc had recorded its share of interest and dividends from the subsidiary company. Even if there is no such sentence like this, you should be able to trace it by looking at the information given in the statement of financial position, and also by using the information in A. So let's now do the requirement. Consolidation journal entries to eliminate the income from subsidiary. Income from subsidiary here is the intra-group dividend receivable and intra-group debenture interest receivable. So all this must be eliminated. The one that I highlight here, it must be eliminated because this is income from subsidiary and intercompany or intra-group transaction. You're also asked to prepare the statement of financial position for the group and extract statement as at 31st of July, year 4, which is the year end for this company. The year end for this company is 31st of July, year 4. Okay, so what you need to do is now to do the cancellation or elimination of the intra-group intra-group transaction. Okay, you are going to eliminate the intra-group transaction or the balances of the intra-group dividends payable and receivable. So you're going to remove from your current asset section as well as removing from the current liability section as follows. So you will go and debit the debenture interest payable, the current liability in silent by how much? That should be debited by the intra-group debenture interest payable. So here you have a total, as I show here. Just zoom in a little bit. Yes. You have a total of 20,000 debenture interest, but 4,000 relates to group members. 6,000 relates to group members. So that 6,000 must be eliminated against the 20,000 that you have here. So it will be eliminated, right? And how, if you are not given this correctly, maybe there are some the record was not properly made, you can also check. How do you check? You check by taking the 30% percentage which are held by the debenture holder and multiplied by 20,000, the debenture interest payable in subsidiary, because your share is 30%, 40%, and 70% respectively. Okay, that was for the intra-group dividend. So when you do this, you debit here, right? Debit debenture interest payable. It will be shown here. So first you need to combine. Let me just remind you. You create a column. I have recreated a column to combine the result of holding and the subsidiary. This is the consolidation procedure that I'm using a worksheet for today. So you will just combine those items. Just combine column F and column G, which is holding and subsidiary. You have 60,000. And now you do the elimination. That 6,000, which is this 6,000 here, will have to be eliminated, right? And it will be eliminated against the 20,000 that you have here. And that is 6,000 again. So this is what you go and debit, 6,000. This is what you go and credit. So at the end, what you would have in the consolidated statement of financial position, it will be 64, which is 70,000, the total, minus the intra-group transaction or elimination of intra-group transaction of 6,000 and 64. And this 64,000 contains the one of parent and the one payable to the other debenture holder. Next one, we repeat the same for our preference dividend. First, eliminate. Debit preference dividend payable silent, which is the subsidiary. Credit preference dividend receivable, which is an asset, havoc. And do the same thing, which is to cancel off the intra-group dividends. And the intra-group dividend is 8640, which is from here, from the section relating to current asset. And that amount must also be removed from the current liability section of the subsidiary. Okay, next. Next thing that we need to do is to do the elimination. And to check whether that is a correct share of dividends, you can also check by using the percentage given here, 40%, right? Multiplied by 21,600, and that was 8640, exactly the same as what the parent has taken credit for. And that is being eliminated again. And when that happens, the current liability will be reduced and the current asset will also be reduced. So you will repeat again the same thing. Reduce it with the intra-group dividend and reduce again with the intragroup dividend that were paid to the parent. And how much? 8640. And now the column here will be 51,600 minus 8640, and that would give 42,960, and this is the consolidated figure. We repeat again for ordinary dividend. For ordinary dividend, first you do the same. Yeah, go and cancel off or eliminate. How much? It should be 17,640, which is the one in the current asset section under ordinary dividend receivable from silent. Do not eliminate dividend receivable from outsiders or third party. Only eliminate dividends receivable from the group members or from subsidiary or any other subsidiaries that the parent may have, multiple subsidiaries, for example. Okay, the working for that, if in case it is you want to check whether that is correctly done, you can go and take 70% percentage acquired, which is your controlling interest, times 25,200, you have 17,640. So when you debit here, you should remove it here. And when you do that, just change the color. There was some mistake just now. Okay, correct. You should also be doing it up here, which is to go and credit the asset account. So when that happens, you have already now eliminated all intra-group transactions. And with that, you will see that there are no balance here because all intra-group transaction has been eliminated. And here we report 23,560. So that is how you do it. And I'm going to, this is the way you do for, if you are doing for consolidation using a worksheet. So using consolidation worksheet. But for exam purpose, you are not going to prepare this consolidation worksheet. For exam purpose, you are going to prepare the consolidated statement of financial position in this format. So let's look at what I have here. I have segregated the one which relates to the parent with the one relating to the subsidiary for the item debenture interest payable. So if you see here, debenture interest payable 64,000, I split it into 50,000 that is of parent and 14,000 that is of subsidiary, and that will actually reduce the chance of you making mistakes should you just add them together and there are some error in your calculation, perhaps the one due to the non-controlling interest. So this is the one payable by parent and this is the one payable by the subsidiary to the non-controlling interest. The one payable by the subsidiary to the parent has been eliminated because that was intercompany transaction, and that is regarding dividend. Debenture interest payable not to the non-controlling interest. I just make some correction here. It should be the one to other holders, other. I just put here to others. Okay. Right. So the same thing, I split for my preference dividend payable. Preference dividend payable by the parent or holding company is 30,000, which is from here, this 30,000, right? And just now that 50,000 was from here. Yeah, this 50,000, the debenture interest payable, right? Next is the preference dividend payable to the non-controlling interest. You can see the working here. the one of the subsidiary 21,600 minus the intra-group dividend 8,640. So you should show the working clearly. Marks are given. 20,000 for the debenture interest by subsidiary itself, 20,000, this 20,000, minus the intra-group dividends, the 6,000, intra-group debenture interest, sorry, that was 6,000, 14,000. And here is on the ordinary dividend. You split between the one payable by parent and payable by the non-controlling interest. To the non-controlling interest, which is the one payable by the subsidiary. To the non-controlling interest is 7,560. With that, that's it for this session, and we have done the first situation, and first situation is where both parent and subsidiary have recorded the dividends. And some point to note regarding this section, the interest payable that still remain here, this the purple interest here, that remains here, that is the one that you will disclose in the consolidated statement of financial position here, and together with, of course, the one of the parent. And that represents the debenture interest payable to other debenture holder. And we are talking about this 14,000. Okay. With that, I thank you for watching. I'll go and check your textbook, page 394, chapter 11, for more details and for more example. Page 394, chapter 11, 395, and 396 up till 398. That was the first situation. Thank you for watching. I'll see you when I will see you. I'm signing off. Assalamu alaikum warahmatullah.